GM, hey Sunshine, how's it going?
Good. How are you, Kent?
Doing good. Long time no talk. What's shaking?
Nothing new. I just got back from Vegas and I'm excited to go to ETH Toronto, ETH Women's next week, next Monday. We're flying out to Toronto, so I'm pretty excited about that.
Same,
What about
same.
you?
That's awesome. I spent the weekend on a blueberry farm in central Ohio, and I'm going to be driving to ETH Women, ETH Toronto Blockchain Futurist Conference to meet you there. And looking forward to volunteering in the morning and then hopefully staying up long enough to make it to the boat party.
So what are you going to do as a volunteer? Do you know yet? Did you have
Uh,
your meeting?
I did. I'm going to make sure that there are no problems. That's my job. If there's spilled coffee, if there are any issues, just find somebody with an official shirt on and a microphone and tell them to help.
All
So
right. I
it's
want to
not
hear
too
about all
bad.
of the problems.
Yeah, I'm excited uh,
Yeah,
to tell you
I'm
all
excited.
about it.
I'm excited to participate in the hackathon. So I'm
Well, tell
looking
me
forward.
about it. What is She Nodes?
So She Nodes is myself and another She Node, Izzy, and we are female node validators, or at least getting into the space now. So we're pretty much we are documenting our journey. We are documenting our journey on becoming node validators in different arenas or protocols, and we're going to document that experience with a goal to teach others and mentor others in the space.
That's fantastic. So mentoring others being other females and women.
Mm-hmm. Yep, and really, it's more of a community that we're building right now, to share our story and share with others that really anyone can become a node validator if you have the will and drive for it and a little bit of collateral to put in.
I love it. Excited to see how She Nodes can blossom and how I can continue to support. You're exactly the type of individual that Ethereum hopes to support, and that's someone who has strong desire and willingness to learn and persistence. And you know, it's incredible to see what you've already been able to do thus far. And I know it's a long journey, so excited to support you through the whole process.
Well, thank you. I'm excited to meet my team. There's 5 people in my team right now, and I haven't been able to connect with them yet, but I can't wait to see what their gifts and talents are and see what we can do together next week. So I will keep you updated and let you know.
Phenomenal. So what should we cover today? What question would be helpful for She Nodes in evaluating, should you be a node validator? Why should you be a node validator? Or, why Ethereum staking?
Yeah, so I think the why is really important, and I think you can accomplish that if you're able to say it in a way that anyone can understand it, either the experienced node validator or someone that's been around a while in Ethereum, or somebody that is just getting into the Web3 space and they're like, why should I stake, or why should I become a node validator? If we can explain that really well, I think that's what works, and that's how we're able to really onboard people and show what a benefit that this is, to be a part of the Ethereum network, for security, and then also make a passive income, have a little side hustle, um, kind of have dividends as you have compounding interest. So I do want to talk about what I think is really important is the basics. Starting with the basics, I think is really important, and just having a general understanding of Ethereum and the tokenomics. And so I'll kind of tell you what I know, and then if you can kind of just give me your wisdom. So I'll ask you something first. If you could kind of describe what is Ultrasound.Money and what is
Yeah.
your understanding of Ultrasound.Money?
Ultrasound.Money is a meme for Ethereum in that encompasses Ethereum is more than just a stock. It is more than just a commodity. It is an asset that has unique features that call it Ultrasound.Money. And that's summarized by the website Ultrasound.Money with the different stats that are provided. So it's a complex meme that then is broken down here. And at a high level, what is Ultrasound.Money? It is, you know, Ethereum's logo with bat wings. And so anytime on Twitter, you will see somebody who has, let's go to the bottom of the page. Please don't be mad. The bat and the sound next to their Twitter handle that they are in the Ultrasound.Money family. And that means they support, you know, the Ultrasound.Money meme and Ethereum as a superior asset. So Ultrasound.Money means Ethereum is a superior asset, and it is a superior asset because not only the money that it makes, but the premium that it should hold. So this all comes back to premiums and how people value assets. So my favorite here, and I think you may have seen this before, is, you know, the monetary premium the world puts on gold. So a lot of individuals think that Bitcoin is digital gold, and gold currently has a monetary premium that I believe is 9x its true value. And so oftentimes premiums are given to an asset when individuals believe it holds more value than just the money that it can produce, or the other standards you would equate an investment with. And so Ultrasound.Money is a meme that now has a lot of statistics around it when you can decide if Ethereum truly is a great investment to own. And the highest level stat, I'm sorry I've gone on so long, is around the supply of Ethereum. And Ethereum supply goes down when there's high demand, and then the supply increases at about 2% a year when there is steady demand. And so inflation is not a friend of most individuals in the United States today who aren't used to paying more for milk or eggs. And also with your assets, when it is inflated away, meaning there's just more Ethereum created, it dilutes the value of the existing tokens. But Ethereum upgraded to proof of stake, and with this, a mechanism that decreases the amount of Ethereum in circulation, which increases the value of the outstanding supply. And so that's the first stat that you see on Ultrasound.Money. What do you think?
Yeah. So, okay. So first of all, that's based on, so Ethereum has an unlimited amount of supply, but because of the token burning mechanism is what is the reason why, correct? Is because
so
the
Ethereum
amount of
has a set supply, but it increases every year at about 2%. And so what that means is that, like, can you identify the current amount of Ethereum in existence at this current moment? The answer is it's very challenging because there's always new Ethereum created in every block that incentivizes participants to validate the network. And that is a bootstrapping mechanism for the network to create more tokens and inflate the supply to reward validators to secure the network. And so you're right, there is an unlimited cap to the potential amount of Ethereum out there, but there is a known amount of Ethereum that was sold originally in the ICO. And since then, the amount of supply has increased. And recently, the supply has decreased after the upgrade to proof of stake. So this chart is showing you a very small view, and I'm sorry to cut you off. This is just 7 days. So if we could see even beyond 30 days, we'd see a different chart. But right now, we're just looking at within the last 30 days, you know, there's been high demand on Ethereum. So you can see that the total supply has actually decreased because of that.
So the supply of Ether decreases by 1 issuance, and inflationary, and then 2 by the burn. with the upgrade, meaning that you can burn more ETH and your issuing and your supply goes down.
That's exactly right. So the issuance is set, but the burn, like you said, the amount of Ethereum that is destroyed, and that is Ethereum that's used in transaction fees. So kind of just like at the grocery store, when you want to be right at the front door or at the center aisle, those companies pay more. So users pay more to get first in line to use the Ethereum blockchain. And when they do that, the additional Ethereum is being burned. And that net difference is shown here, in that even though new Ethereum is created, more has been burned. So a net decrease in supply.
Okay, but then also you have to think about the monetary premium, right? That you were saying, which is the price of the liquid token. That it prices the collateralized as well, right?
That
The
is, so that's a good question on the monetary premium. It's a bit different than the piece on the collateral. So the collateral would be total value secured. This is a new stat. This is not used in traditional finance. Like, you don't go, hey, how many users does Google support? We talk about active users, but value secured is the new element of Web3, where it's the user-owned internet. And in the creator economy, and just like PayPal launched a stable coin on top of Ethereum, we will now see PayPal's PYUSD token up here. And all of the projects that are built on top of Ethereum are being secured by Ethereum. So it's a total value secured. So we've got some stats on the value that's secured today. But coming to like the monetary premium, which is like the most desirable form of money, it's a bit different than that collateral that's used in liquid staking tokens, for example, with RocketPool. So if RocketPool used the RPL token as collateral to then create a liquid staking token in the market, this monetary premium just regards to how much people value the ETH asset. So like, you could give a monetary premium to the RPL token or any token if it had unique characteristics. And the ones that are unique would be like a growth profile. So comparing this to like a high growth tech company, Intel has a growth profile. It's a 9.3 price to earnings ratio. So if you take the price of Intel stock and you divide it by the earnings, you would come up with the number 9.3. You can see that, Amazon has Amazon has a higher multiple, which we can't currently get a number on, but it's above Ethereum at 62.2. So when you want to compare Ethereum to other assets like Apple stock, Google stock, Meta, bank stock, etc., you typically do that through a growth profile. And you can see that currently Ethereum is already valued, in the growth profile of some of the fastest growing companies in the world. And the monetary premium, again, is that piece of comparing it to other assets. Gold maintains a 10x monetary premium. So currently Ethereum doesn't have an implied monetary premium, but in your mind, if you thought Ethereum should maintain a monetary premium, at least half that of gold, Ethereum could be valued at $11,000 per token. Personally, I think Ethereum will be valued at around 10K eventually. That meme of ETH at 10K can be actualized through true revenue on chain, but it's a while till we get there.
So the monetary premium, you're looking at the growth profile, or the P over the E. So
price to earnings. Yep.
Price to earnings. So I can understand that in like a company like Apple, Google. How do you calculate that with Ethereum?
Great question. The price is the current cost of one Ether token today, which I believe is around $1,800. And then the earnings can be determined by all of the transaction fees that have been spent by users to use Ethereum. And so Token Terminal is my favorite place to see these insights, comparable price to earnings, price to sales ratios. But Dune Analytics is a free source that anyone can use. So let me see if I can find a Dune chart that highlights the revenue that Ethereum is making. But this is all public information, and it's just that it's new, and so not a lot of sources.
I have a question. But that doesn't really take into account what's currently being staked. Is that correct?
What's currently being staked, does that take it into account? I don't understand.
So you have your profit, which is basically the base fees, the blocks. So if this is a company, then the product that's being sold is selling block spaces, right? That's secured online. Let's just say that. So that's the product. And then the fees. And then, so then you would look at the amount that you sold versus what it's worth, right?
Yes, and that was a bit complicated. Ethereum makes money because people spend money to use it. Where does the money go that Ethereum makes? It goes to the Ethereum stakers and the Ethereum node validators. They are the ones who make the money because they have locked up their Ethereum to earn the staking rewards. So anytime anyone uses Ethereum, like anyone on PayPal, Ethereum stakers and node operators benefit.
But because the locked up Ethereum is really considered like almost like a collateral, wouldn't that be an unknown amount of profit then? Because it's not actively in the market. It's like almost like being invested and held. Or does that make a difference?
So Ethereum's tokenomics are different than RocketPool's tokenomics. That's an apple and an orange. Let's focus on the apple, which is Ethereum. Ethereum's tokenomics work like this. If you have 32 Ethereum and you lock it up, you can earn a staking rate of return. That rate of return is around 6%, including MEV, which is additional rewards for that center aisle space. Now, on top of that, you could earn more rewards if you help participate in a liquid staking network like RocketPool. RocketPool enables you to run a Ethereum validator and earn 15% off of liquid staking individuals because you have to go and acquire the RPL token in addition to your Ethereum to run your independent validator, which is actually a pooled validator in a smart contract. Ethereum has a consistent rate of return. It's based on the amount of Ethereum that is staked. The more Ethereum that is staked, the less rewards that are paid out. The extra rewards on top are MEV, that is maximally extractable value. And so that currently is around 1.5%, which is around 20% of the total Ethereum staking rewards that are possible. So coming back to the question, there are two separate things. There is the collateral that individuals put up when they stake ETH to run a validator is locked permanently until they unlock that validator. Liquid staking tokens enable small participants to get a token back and use that in DeFi. But regardless, for Ethereum to remain secure, individuals are locking up their ETH and not able to use it in DeFi to earn a staking reward. So that's probably a lot. I think it's just a mix-up between how RocketPool and Ethereum work.
I was trying to understand as far as, show me that chart again.
Which chart?
On the Ultrasound.Money.
Coming right up.
Oh, the growth, the monetary premium and the growth profile.
Yeah, so this has nothing to do with how much money it makes. This has to do with how much money it makes because you take into the earnings into account. So the earnings are the base staking rewards plus the MEV.
Okay, I understand. Okay. So that's the earnings and then the profit.
No. It's the price
The
divided
price
by the
by the
earnings.
Okay. So the price of Ethereum, which is about $1,800, right?
Mhm.
And then you would divide it by the actual,
The earnings.
which would be the staking rewards.
That's exactly correct. Top of the staking rewards, it's also the MEV rewards.
Which is about
So
1%.
yeah, about 1.5%. It varies. So it varies because it depends on market demand. So this is now a paid product, but you could come over here and you can compare using financial statements the way most people are used to looking at what type of projects they want to invest in. And you can see comparatively, well, I guess we can't see that data it costs. On a monthly basis, how much is Ethereum making in fees? How much revenue are they making? And then total earnings. So,
Okay.
and this is just on a month-to-month basis. There's lots of different analysis you can do. Yearly is pretty awesome. Looks like I can't get to quarterly. The analysis and the details are tremendous. At a very high level, it's so simple. You focus on the companies that make money. If you don't make money, you're not a good investment. If you make money, then you clearly are doing something right because people are paying you and it's costing you less to give that service than you're making in return.
Is there a calculation for the burn as well for the supply?
There's definitely a complex calculation for the burn. And all of that takes time to uncover, but you can find that information. I'd probably start on Ethereum.org, and we would go into the learn section, and we would then go into.
Because I was reading something where it said that the supply of the Ether burn or Ethereum burn is 2 million per year, and the issuing per year is, I think, 3 less faster, or the burn.
So there's a lot of people who are trying to put together financial models on where Ethereum is going to go based on past results. Now, stepping back at 30,000 feet, Ethereum is experimental technology. It's very early in its life. This is like the internet at 4 years old. And so it's very hard to put this into traditional terms like this is a company that's been around 100 years. So lots of people try and come up with complex models as to how it works. And John Trebreau has a great example. And here is taking calculation of the amount of ETH stake, the number of validators, and then you get into like slot time and base reward factor. There are calculators on calculators out there to figure out what Ethereum should be valued at based on the tokenomics that it has in place. So nobody really knows, but there's tons of fun analysis, and I call it like chart porn because nobody really knows, but they're coming up with different analogies and ways to come up with the figure that I want. But just short and skinny is that Ethereum makes the most money out of any competitor, and it now has superior economic model that rewards individuals who take their Ethereum and they lock it up and stake it.
Wait, isn't there a calculation for the token burn? Or
There definitely is.
I guess it depends on the amount of transactions, and that's what you're saying you can't predict is the amount of transactions.
So there's a calculation based on how much demand there is, how much Ethereum should be burned. Now,
Mhm.
how much demand is there going to be in the future is something nobody knows. Hence, nobody can actually give you a clear answer, but there is a clear answer based on estimates of demand. So we can take estimates from the last 2 cycles and replicate them into the future to figure out what is, Ethereum's burn versus issuance rate over the next couple of years, but nobody truly knows.
But
We
I
do
mean,
know, yeah.
well, I was just thinking about like the tokenomics. You could look at the dominance and then decide how much market cap it's going to come in. I mean, again, that's prediction. But if you were able to say like, what is the market cap's like 1.2 trillion, and Ethereum has like an 18 to 19% dominance or something, right? Does that sound about right?
Dominance compared to what?
For the entire market.
The entire market, you mean the total market cap of all shit coins and cryptos out there? Like, what is Ethereum's
Yeah,
market cap? That sounds
yeah,
about right. But to me, that's a relevant statistic.
because I think Bitcoin's like 48% or something. And then, so if you could calculate and figure out the market cap, couldn't you decide and kind of predict how much inflow was going to come in, and then predict it that way with the gas burn, looking at other cycles?
So there are lots of ways you can predict, and the short answer is yes. You can go down that path. I would start off with some of the models that other experts have created, like John Cherbow or the Vanek or Kathy Wood with ARK Investments, or anything that the bankless community has created. To be kind and direct, I think some of your assumptions in your model need a bit of fine tuning, like how you can estimate that stuff. But in essence, Ethereum is the most desirable place today to launch anything in Web3, and the demand continues to go up. I don't think it's relevant to compare Ethereum to the collective market cap of other projects out there. That's like going back and saying, like, because the phonograph has this much of the communication space today, it should be worth this much. We really don't know the potential, but we can estimate based on the total value that's created on the internet today. So Andreessen Horowitz, in their 2023 crypto report, is one of the best places that you can go for a summary. But the best way that I have found personally to think of Ethereum is by just stepping back and looking at its true price to earnings and it as a business. And Ethereum is an extremely competitive business that makes a lot of money. Very few other blockchains actually make money. And so it is the best opportunity for me and for a lot of other friends and smart people I know to just lock it up and take advantage of being early to, facilitating proof of stake.
Mm-hmm.
But I would love to help you and make sure that you can back into whatever formula or calculation you would like to. I found there are many holes in most people's assumptions. The past and the future are not the same. The past will rhyme like the future, but it's not the same. And a lot of people just try to build a castle on top of poor assumptions. So we can just take into account what's happening today and then go from there. It's my thinking.
Okay. I understand that, but also when you only have the past to look at things and look at statistics and to look at stats and past bull and bear markets, that's really the only thing that we can look at and see what the growth is. So that's what I'm trying to figure out, is what information we have to kind of, make the best guess or guesstimate on what we think, how this will grow, right? If we're saying, yes, Ethereum is, a very good investment for this reason, being able to have those numbers, I think, is really important. And I know that they're not going to be conclusive and we can't predict the future, but I think any information that we can say, well, this happened in the past, this could happen, or this could happen, it can give me a better idea of at least having a little bit better market predictions of where the market is going.
Yeah, and I challenge you to come back with those questions. So whatever those questions are, there's tons of answers on the internet. It's just figuring out how to break it down into like what's digestible for you. So I think Ethereum is the best Web3 asset. I think Ethereum is going to be worth 10K or more based on the past demand, the current market dynamics, and everything that's available. But getting confidence and helping individuals figure that out is the gap that we're trying to solve here. So
Yeah.
like, what are the holes that you have today to get you, what questions do you still have? You're trying to figure out why Ethereum is worth.
No. Will you pull up that Ultrasound.Money? I did have a question on there that I saw that I didn't understand. There's one of the charts or graphs that I was looking at.
1 second. Yeah, these are all really good questions, and I really encourage you to keep asking and figuring out what you need to figure out to feel good about learning how and why you want to stake ETH be a validator. I find that most people don't share once they know. So yeah, what's your question?
Let's see. All right, scroll down. I see that the gas projections. Oh, I think scroll up. So what you're saying is there's no way to really predict for sure how much the burn is going to, how much burn is going to occur, because it depends on the transactions and the burn. So
yeah, it's just like saying
kind
like I can't predict the weather.
The supply and demand is, because we could have a really heavy transaction day, and I saw in one of those graphs they really they fluctuate, so that can really change the numbers of the burning. Oh, okay, so the rewards, they were talking about the now and later, this burn rate and then issuance rewards. What is the when you click on it and scroll back and forth, what is that, what does that mean?
So do you see what's happening? As the issuance goes down and it goes to 2.5% a year, you see the supply goes up. Sorry, the staking supply goes up. As the issuance goes up, the staking supply goes down. So like I was telling you, the more that is staked, the more supply will go down. Right now, we're at about 20% of Ethereum is staked. So it's paying out 3.5% a year for stakers. Now this is expected to increase, and
Right.
potentially
So
double in the next year.
that makes sense to me, because you're having less supply and more stakers, so you have to share the rewards with more.
That's exactly right. And so the burn rate, you can project we're going to have the same usage that we had in the last cycle. And what it's saying is the burn rate for non-stakers. So Ethereum that is burned benefits individuals who are staking as well as individuals who are not staking, because you can still hold the asset. And if there is a smaller amount of Ethereum outstanding, it should be worth more in theory. And so they have a variable amount of MEV. So when we go to the right here, that would mean there's just tons of demand for Ethereum, so much demand that a lot of Ethereum is being burned. Or there's standard, where Ethereum is used as estimated at a standard level, and there's going to be 0% burned. and we would just have an issuance growth rate of about 2.6% a year. And so by staking, you do not get diluted, you continue to have more. And on top of that, you likely will also benefit from the high demand that happens on Ethereum. And that's from the burn rate. Now there's some different markers here with, this is the Ultrasound.Money indicator. I don't know what that means. I don't know what the 30-day means, these different indicators. To be honest, my understanding was we were at about 1.5% right now for the burn rate, but there's a bit I need to get ramped up on.
What is the burn rate? What controls that? You were saying that
The amount of demand. The more demand, the more burn.
Okay.
So does that make sense?
Yes. How does the burn affect GWE or gas fees?
So the more demand, the higher the gas fees.
Right.
The higher the gas fees, the more the burn. So let's just take an example. We'll click on, so this is Etherscan. This is a block explorer. We can go look at some of their stats, and you can see how much in each transaction goes towards the burn. And the higher the gas price, the more the percentage that goes towards being burned. Does that make sense?
Yes, it does.
Okay, so I'll have to poke around a bit here to figure out the burn of the last transaction. And if you don't mind, I will just jump right
I was
in.
just wondering.
We'll go into Uniswap. They use it the most. We can see that they have multiple pending transactions on Uniswap. We will go to the last transaction that went through. Let's pick a bigger transaction. This person did something for 3 ETH. And we can see this happened 31 seconds ago. Here was the block number that it happened in, and confirmed by 3 different validators. That means they have included this transaction, which is this, and all of the other associated transactions on the consensus chain. And so that will be preserved forever. And when we scroll down, we get to, this was the transaction fee was $10. It looks like it was about 55 GWE, and I lied. The gas price was 28 GWE. We want to see, click on more details. This is the fun part, where gas limit and usage. Here's the complex stuff where we need to get an expert to talk through the differences. But there's a gas set by each user, and then depending on the block producers, they can use all of that or they could not. You can see that 77% of the potential gas that could be used was used, and we can see that $10 was burned of this transaction, and there was $3.84 of savings by the person not using up all of the gas that they were willing to use. So that person said they were willing to spend 38 GWE on gas, and they set a base of 27.8 with a max of 0.1. So this transaction created $10 in burned Ethereum. So we can see each transaction, how much was burned, and at 34 GWE, not that much is burned. When this gets up to 200 GWE, just like tons of Ethereum are burned, and then validators are making a lot more. I'm sorry if that was a bit in the weeds.
No, I understand that completely. You explained that really well.
Great. These are really good questions, and I hope you didn't take any frustration in my voice from not being able to, with you, it's more so that these are challenging questions, and each person has a different way of looking at it. And I'm excited how we can break this down and share with others that if you can understand ultrasound money, it is like getting a mini MBA in crypto investing.
Yeah, it's a lot. But you have to also understand, like how you explain the gas, and you actually pulled up a transaction feed that made a lot of sense to me, showing how it was burnt. That was a really good example.
Wonderful.
Understandable. So
Well,
yeah, I guess I really like this growth profile index, and kind of comparing it to, other, um, you know, Fortune companies like Apple, Netflix, Tesla, um, because, I, I feel like this is our future. Um, and being able to at least look at Ethereum as a business, and what it gives back, and that's profitable, I think really helps kind of break down why it's such an investment, and why you should stake and be a node validator.
yeah, that's exactly right. I completely agree. And being able to reference other examples that the community has created is very helpful. One I'd like to call on, which is in the weeds, but is by, someone named Marco, is that, like, this may be gibberish to you, but larger investors may be interested when they can see that they can earn, 35% more Ethereum without RPL exposure. And so Marco is a RocketPool node operator who has come up with his own valuation for RocketPool, as well as how to people could take, their current Ethereum node and then break it down into multiple RocketPool nodes and earn, more Ethereum in the process. And so that's how I came to becoming a RocketPool node operator. Is I was looking to see how could I earn as much as possible. And so, my hope is that the guides that, I've created and others have created could be helpful to you. And then we can come up with, an Excel sheet like this where, she nodes individuals can see that, here's one option for staking, here's the next option for staking. And yes, if I have enough to be a validator, I can earn the most. And here's why I'd want to do that.
The other thing that, I think it's hard to put it on paper, because it changes so much, is the other rewards that you get, like the MEV, and then there's a couple other rewards that you get, and it's not really advertised anywhere, but it also isn't guaranteed. So I guess that's really hard to get into and talk about when there's a lot of scenarios and it changes. Does that sound like an accurate
Well,
assessment?
that is an accurate assessment. It's just you don't need to get to that level. It can all be summarized by a rate of return. And so Ethereum is complex in its tokenomics, meaning that there are multiple ways that you earn rewards, not only for staking, but also for maximum extractable value. And then the burn, increases the value of your assets by decreasing supply. So
But you're not
yes,
putting that all in there. And I think that's an important concept to say, someone may come back and say, I'm just earning 5%. Is this worth just the 5%? But really, you're getting a lot more than that when you're adding everything else up. And then on top of the 5%, the, increase intended value of what Ethereum will be in the future, for
yeah,
long term.
that's really it. Meaning
Yeah.
that, like, that 5% is actually like 6.5% as a node validator. So I'm earning like 6.7% on my Ethereum node using the max MEV opportunities there are. But that
Mhm.
6.5% will actually be like 60% when Ethereum is, increased in price and it's actually valued at the business that it is, meaning it has a monetary premium associated with it, and it continues to have the growth profile based on its earnings and its price that could support, a 10K Ethereum. So this isn't something that you just put money in and you pull out $10,000. This is a you know, multi-year strategy of buying low, selling high, and compounding by staking.
But then also with your RPL token, you're also going to have, you know, that collateral that continues to go up as well. That you
Yes,
really, you're
so
not
you
really
have to,
in there as well, right?
can you say it again?
So the RPL token will continue to go up as more validators get in, right?
It should, yes, meaning that there's a limited supply of RPL tokens, and the more node validators there are, the more RPL that needs to be locked up, meaning more demand, meaning price goes up. I agree with you, but at the same time, RPL's tokenomics are different than Ethereum's, and most people need to understand why RPL token. And yeah, RPL is collateral for that RETH. So you may need more RPL as collateral. Not only is it, you know, staking rewards you're going to earn by holding that, but it's that collateral, and you have to make sure you have enough collateral to keep earning those staking rewards. So personally, I've had to increase the amount of RPL that I've been holding in the last few months because of the RPL to ETH price changing. So once again, RocketPool node operators need to hold 10% or more collateral in RPL for their nodes. And if their collateral goes below that threshold, they no longer earn those RPL staking rewards. So yes, RPL will go up in value the more node validators there are, but it's not just something that's set and forget. You got to make sure you have enough collateral to get the rewards. So I think I answered two things at once, and hopefully that was helpful. I love your desire to keep learning and pushing forward, and hopefully we created some good value today.